Tax controversy specialists versus general tax advisors. Which one is better for large transfer pricing audits? Most companies get this wrong. They assume their usual tax advisor can handle complex transfer pricing audits. The surprising truth is that transfer pricing audits involve highly technical rules, multi-jurisdictional tax law, and the potential for significant penalties, making tax controversy specialists essential. General tax advisors provide broad guidance on compliance, reporting, and day-to-day tax matters. They can prepare returns, advise on routine deductions, and offer general planning strategies. But when a tax authority launches a major transfer pricing audit across multiple countries, their expertise often isn't enough. Tax controversy specialists focus specifically on defending clients in disputes with tax authorities. They understand local and international transfer pricing rules, can build defensible documentation, and negotiate settlements or litigation strategies. For instance, a multinational with intercompany transactions spanning Europe and Asia can rely on specialists to navigate OBE guidelines, prepare audit responses, and minimize exposure to double taxation. The key takeaway is that large transfer pricing audits are high-stakes events. General advisors may help with compliance, but controversy specialists bring the technical knowledge and negotiation experience to protect your company and resolve disputes efficiently. The surprising truth is that companies trying to rely solely on general tax advice risk costly adjustments, fines, and reputational damage, while engaging a tax controversy specialist early can reduce audit risks, preserve cash flow, and provide strategic peace of mind.